All right, let's just jump right into it. What is the crypto market actually going to look like in 2026? After all those years of just wild swings, we're at this really pivotal moment. It feels like powerful new forces are slamming into crypto's old predictable patterns. So the big question is a new era about to begin, or is this just more of the same old story? Let's break it all down.
So, here's our roadmap for today. We're going to start with why 2026 is shaping up to be such a critical year. Then, we'll dig into the three major forces at play: that huge wave of Wall Street money, the whole global economy situation, and Bitcoin's own internal code. And then, we'll see what the experts are saying when they put all those pieces together.
Okay, so let's set the stage. We're calling this the crypto crossroads for a reason. For the first time, really, the market isn't just moving based on its usual internal cycles. There are these new, powerful, external forces getting mixed in, and it's how they all intersect that makes the 2026 outlook so darn interesting.
Think about it this way. For most of its life, crypto's been like a small, nimble sailboat, driven mostly by individual investors. But now, an aircraft carrier has just pulled into the same waters. We are talking about the full-scale arrival of serious, mainstream institutional capital. This isn't just a bigger wave. It's a fundamental shift in the entire ocean, and it's changing the currents for everyone.
And that brings us right to our first major driver, the Wall Street wave. Honestly, this is probably the biggest new variable in the whole crypto equation. It's totally changing how money flows into the market, and maybe more importantly, who is doing the buying.
Now, this didn't just happen overnight. This road was paved over several years. It kind of started with these early signals, like the Grayscale Bitcoin Trust. Then you had the big guns, like Fidelity, building out the essential infrastructure. But the real game changer? That was the SEC's approval of spot Bitcoin ETFs in 2024. All of a sudden, major investors had a simple, regulated way to buy actual Bitcoin. And that just opened the floodgates for the record-breaking inflows we saw in 2025.
And hey, don't just take my word for it. This quote from Grayscale, a huge player in the space, just nails it. They call it the dawn of the institutional era. That tells you that, in their eyes, this isn't just another cycle. This is the start of a whole new chapter for digital assets.
And this number, this really puts the scale of it all into perspective. Over $50 billion in net inflows. And let's be really clear here, that's not just speculative retail money that comes and goes. This is a persistent, daily fire hose of new demand from some of the biggest financial players in the world. It is fundamentally rewriting the market's supply and demand dynamics.
Okay, let's pivot to our second major force. Because, crypto doesn't exist in a vacuum. The global economic equation, with all its moving parts, creates these powerful tailwinds that can push prices up, but also some serious headwinds that can hold them right back. What's so interesting right now is this constant push and pull. On one side, you've got potential tailwinds, right? Things like interest rate cuts that make riskier assets like crypto look a lot more attractive. Or global uncertainty, which really boosts Bitcoin's whole digital gold story. But then, on the other side, you've got headwinds like stubborn inflation and regulatory crackdowns, which can act like a huge brake on the market. Both of these forces are in play as we speak.
Okay, so we've looked at the big external forces. Now let's turn inward to something that's baked right into Bitcoin's DNA. This is its built-in clock, a predictable, pre-programmed event that has basically been the metronome for every single major market cycle in its history.
So what exactly is the halving? Well, it's actually pretty simple, but incredibly powerful. Every 4 years, Bitcoin's own code literally cuts the reward for mining new blocks in half. What that means is the rate that new Bitcoin get created is sliced by 50%. The result is a predictable, verifiable supply shock. Less new supply is hitting the market every single day.
And if you look back at history, this supply shock has kicked off a very distinct pattern. First, you get the halving event itself. Then, that supply shock starts to take effect. And what's followed, historically, has been a major price run-up in the 12 to 18 months after the event, which usually ends with a new all-time high for the market. This cycle has been the core engine of Bitcoin's long-term price action.
So, you've got the Wall Street wave, you've got the global economic equation, and you've got Bitcoin's internal clock. Now let's see what happens when the experts put these three powerful forces together and take a peek into their crystal ball for 2026.
Now, what's so fascinating here isn't just the numbers themselves, which are obviously pretty bullish. It's the consistency in the reasoning. I mean, whether it's Bitwise, Bernstein, or Forbes analysts, the key rationale is almost always the same. It's the historical power of the halving cycle getting supercharged by this completely new, unprecedented wave of institutional demand from the ETFs.
This chart gives you a great, quick, at-a-glance summary. The forecasts, they range from a more conservative $120,000 all the way up to a very bullish $200,000, and even higher. But that general consensus seems to be clustering right around that $165,000 median mark. That suggests a pretty strong belief in some serious upside potential by 2026.
So let's just boil this all down to the key takeaways for you. Number one, the Wall Street wave is here and it is a genuine game changer. Number two, the global economy is giving us both fuel and friction at the exact same time. And number three, despite all these new forces, Bitcoin's old, predictable internal clock, that halving, is still a fundamental driver of the whole market cycle.
And that leaves us with the big question, right? With this unprecedented collision of institutional money, macroeconomic pressures, and Bitcoin's own programming, will 2026 truly mark the beginning of crypto's mainstream institutional era, or will it just prove to be another, maybe bigger, turn of that same old speculative wheel? That is what the entire market is waiting to find out.